Hey everybody, welcome back to the channel. My name is Kimberly and today we'll be taking you through one of 5 new launches that will be coming up in 4th quarter 2025. And so today's discussion would be Skye at Holland along Holland Drive Road, which is very near the Holland Village MRT station. So what I'll be doing very different from the rest of the other new launch reviews you see online is that I won't be taking you through too much of the on-stay quality of the development, but what I'll be doing is more of rating as well as analyzing very deeply the investment numbers and its viability in terms of making money for investors. So it'll be a very deep dive analysis with a lot of numbers, and I'll pose a couple of questions to you at the end to see whether you have the same kind of thoughts as me or whether it's something that gives you a little bit of nuggets to think about. So without further ado, let's get right into it. I'm extremely grateful to be part of JNA Real Estate, where we have helped over 700 clients over the past 8 years achieve a per annum average return of 19.56%. So now we know the holding period is 4 years, so actually we have to be extremely judicious in terms of where we put our money. Let's get right into Skye at Holland's information as a whole. So what I'll do differently, as I've mentioned in the very early on, is that I'll be glossing through mainly the general pointers of the development itself, but I'll be going very deep into the numbers. Skye at Holland, first and foremost, is a joint development by Holland Development Private Limited, and it's actually a joint venture among 4 different developers. First, CapitaLand Development, UOL Group, Singapore Land, SingLand in short, and Kheng Leong. So we can see that the site area is actually pretty substantial. It's about 133,000 square feet with a gross plot ratio of over 4.7. So 4.7 is second to one of the highest ever gross plot ratio of 4.9. So anything above 2.8 gross plot ratio, you can actually build more than 36 stories. But what it just means is that it's very intensive in terms of land use. It's actually 2 blocks of 40 stories, meaning that you have 2 pencil blocks, 2 very beautiful blocks in fact, and it's 40 stories high, and you have 2 of these. So in total, you're looking at about 666 units. So very healthy transaction volume would see in the next couple of years when it TOPs. That's just one of the indicators. In terms of tenure wise, we're looking at 99-year leasehold from 19 August 2024. Address wise is actually in a very prestigious address in District 10. You're looking at 2 and 6 Holland Village Way, which is just next door, or in fact by the footstep of One Holland Village, the Holland Village area in terms of the commercial shops. So we're expecting a TOP of October 2029 in about 4 years' time. Just to give you a bit of track records from the developers that are involved in this development. So first and foremost, we're looking at CapitaLand. So CapitaLand, we're seeing that is actually a very extensive and very aggressive player. As you can see in one of the earlier launches this year in 2025, we've seen Parktown Residence. Parktown Residence is a mixed development in Tampines. So in fact, on launch day, you're looking at about 87% of its inventory being sold. And if you can see here, in terms of the price per square foot wise, actually it ranges between 2003 to 2004 per square foot on average. They are very famous for it. No doubt CapitaLand outdoes itself. And secondly, the other notable projects that's involved in is Canning Hill Piers, which 3 years ago when it first launched, it actually sold out 77% of its entire 696 unit collection, including a $48 million penthouse. So back then, I remember Canning Hill Piers being a 99-year leasehold luxury project that is not in CCR but in RCR, is actually one of a very hard pill to swallow, but yet CapitaLand still outdid itself back then. So let's go on to UOL. UOL is the brains behind Wharton House. Wharton House is one of the 3 house collections. So you have Mayor House, Wharton House, and more specifically the UpperHouse collection. So you can see that UOL, when it was developing Wharton House, it actually sold 74% of its launch date inventory between 3,004 to 3,005 in the range of $3,250 per square foot on average. And one of the biggest selling points is because it's 1 km to Raffles Girls Primary School, which is a very popular school in Singapore. A lot of parents want to send their girls there. In the 3rd leg of its house collection, you're looking at UpperHouse, which is by the doorstep of Orchard Boulevard MRT station. In fact, it's in a very prestigious address. It's actually moved 54% of its units at $3,350 per square foot just on launch day. And if we look at Singapore Land, SingLand in short, it's the brains behind Mayor Blue, which was a very big shocker last year when we saw a D15 project crossing $3,000 per square foot on average. In this case, $3,260 per square foot on average just for a 99-year leasehold project in D15. It's also moved UpperHouse. It's a joint joint venture between UOL and Singapore Land. Again, you know, it's the brains behind UpperHouse as well. So you can see across the board, you have very behemoth of the developers landscape coming together, pushing behind Skye at Holland. So you can expect nothing short of the best from all of these different extensive track records of these developers. And last but not least, Kheng Leong. Kheng Leong is the brains behind, again, Mayor House, one of the 3 house collections behind UpperHouse as well as Wharton House. So UpperHouse and Wharton House, they did UOL as well as Singapore Land. Both of them did it together. And Kheng Leong, no doubt, is also participated in that race. So it's done Mayor House. So Mayor House, as you can tell, you know, it's along Mayor Stretch, and it's a freehold D15 project. It's a luxury project whereby, you know, the 4 bedrooms even can go up to $9.28 million. And it's also the brains behind Nassim Park Residences that sold for over $4,785 per square foot in 2023, and that you can tell it actually belongs to one of the ultra luxe project league. If you're looking at its location as well as vicinity, it's actually very centrally located with Holland Village MRT by your doorstep. You also are adjacent to Holland Village Residences, which is where Holland Village is. So you know, you're talking about the commercial shops, the nightlife, so on and so forth. And Skye at Holland is actually the last GLS that is the closest to Holland Village MRT station. Of course, you have the Holland Link GLS that's upcoming and bidded for already, but that's another story. So you can see that the GCBAs are actually surrounding as well as skirting that of the Skye at Holland land area, and in fact you might get a very clear and very distant view of the entire, in fact you will get a very distant and clear view of what's above the GCBs, because as we know, the GCBs have a height restriction of 2+ attic, which is about 12 meters from road level. So you can see here is actually a very central location. You're also very connected to a lot of very prestigious schools like ACSI, ACJC, Fairfield Methodist School, so on and so forth. And you can also ride on the wave of the District 5 transformation, in fact the Greater Southern Water transformation as well, because as you go down south, you're towards the south of Singapore, which is the One North Kent Buona Vista area, where we're seeing a lot of GLS coming up as well, and a lot of the different projects that will obtain its TOP after this year. In terms of the site plan wise, as I've mentioned, I won't go through too much of the amenities as well as facilities because I do want to deep dive into the investability of the project. But as you can see here, this side of the road is actually like this. So you're getting blocks that are northwest facing or otherwise southeast facing, and you're looking at 2 blocks of 40 stories high. These are some visual representations of Skye at Holland, some artist render. Let's say, for example, when you do pull up in the arrival lounge, this is how it looks like. And of course, this is the yoga area where you get to do some yoga stretches and poses as you zen. And then this would be some perspective of its night view. And then of course, an aerial shot of how the veranda looks like by the pool area. And last but not least, the function room, as well as how high it might look in terms of how high it does it tower over the rest of the other buildings that is adjacent to it. And then of course you have the view of the GCBAs, which is Holland Rise GCBA that's just right in front of you. And then last but not least, let's look at the unit mix. As you can see here, it's of course 2 stories of 2 blocks of 40-story units. We can see the bulk of the unit mix actually goes towards the 2 and the 3 betas. 2 betas, you're looking at combined about 370 units, which is 55% of the entire unit mix. 3 betas, you're looking at about 148 units, which is 22%. 4 betas itself, 111 units, which is 17%, not too bad, as well as the 5 beta 37 units. I do want to point out the area itself. 2 bedrooms, I do feel that it's very fair after it's post-area harmonized. Considering this is a post-area harmonized project, 2 premium plus study, it's considered quite big because this area is very akin to the pre-area harmonized projects that 2 beta that comes with the AC ledge, the RC ledge, as well as the other void area that is being counted towards. But this one, you're having the full usable area, so I'll consider it bigger than the usual non-area harmonized sizes, although they look the same. 3 beta wise, you're getting a very standard 900 plus square feet, and of course it's much bigger since it's post-area harmonized. 3 plus premium, 3 bedroom premium, I'll consider it quite big. 4 beta for a new launch. 4 beta, 4 plus premium. 4 premium is actually pretty sizable in this case in terms of usable area. 5 bedroom, I would say it's extremely sizable. 1,765 square feet. So I do want to get into the prices though. There are a lot of speculations on the prices, but just yesterday we got a hint of the price guide for the different units, and word on the ground still says that it's going to sell for over $3,000 per square foot. So I'll let you know why actually the public feels that way, and you can make a decision and a judge of that yourself. So in terms of the land bid pricing, first of all, why do we even talk about land bid pricing as well as break-even pricing? Because that's the inception of any prices that the developers can make a profit margin from. If we look at the land bid prices, right, so as you can see, UOL and CapitaLand, that 4 different developers under Holland Developments, they bid for the land on 14th of May. In fact, there were 3 bids submitted, with the top being $805 million, which works out to be about $1,285 per square foot per plot ratio, and it's reflected over here. So this is the quantum, 805 million, and then for the land price per square foot per plot ratio, 1,285 per square foot per plot ratio. If we work out everything, including the legal, the construction, taxes, marketing, so on and so forth, the break-even works out to be about $2,203 per square foot. Considering this is pure residential, there is no mixed component or commercial component to it. If we add a 10% profit margin as well as a 7% area harmonization adjustment, we're looking at very floor pricing of $2,577 per square foot for a 10% profit margin. 20% would be about $2,700, $2,797 per square foot, and 30% profit margin you're looking at about is over $3,000 per square foot. So I've compiled all the different new launches that happened in 2025 as well as their launch day reception and their average prices on launch day. You can see from this chart alone, just a one glance view, there are very few CCR launches that happen. In fact, a lot of OCR as well as RCR launches. If I look at the OCR, some of them as well, especially let's say Beckner House, they have already hit launch day $2,490 per square foot on average. Parktown, $2,360 per square foot. Lentor Central Residence, $2,002. And the most notable things that I also wanted to highlight is actually the RCR projects that have actually crossed over $3,000 per square foot. If we take a closer look at this table, you would see that Aurea that was launched on 8th of March, it has already crossed $3,000 per square foot, and it's along Beach Road, standing in the place of Golden Mile. It's actually an en bloc. One Marina Gardens, this created a lot of hype and closed on average for $2,953 per square foot. Arena East is one of the freehold D15 projects that are launched this year, $3,000 per square foot. So if you look at this slide, so I've compiled all the different 2025 launches across OCR, RCR, and CCR, as well as their launch day reception and their launch prices. What we can see from this very simply, just a one glance, is that all the prices, even the ones in OCR, have well crossed over $2,500 per square foot on average. In fact, even the RCR projects, I'm looking at Aurea along Beach Road that's in place of Golden Mile, it's already crossed $3,000 per square foot with a 12% reception rate on launch day. One Marina Gardens along Marina Gardens, $2,953 per square foot on launch day with a 38% reception. And you have the whole slew of Robertson Opus, which is in Unity Road. It's considered CCR. UpperHouse at Orchard along Orchard Boulevard is CCR. River Green is also CCR along River Valley Road, which is by the doorstep of Great Wall City MRT station, and Promenade Peak, this other RCR project along Zyon Road. Each of them, average prices on launch day have already crossed $3,000 per square foot. And you can see that their average reception is well over 50%. It begs the question whether Skye at Holland, with a location that rivals these CCR launches, as well as these very, I would say, notable rival RCR launches, whether they can still also perform as well as how the other CCR launches have performed. Noting that it's actually an RCR, but in a very hot spot location of Holland Village MRT area. What we want to get is actually, we want to know whether today's $3,000 per square foot is actually a sensible pricing, especially for a launch day pricing in terms of a well-received CCR projects. I'll let you decide and be the judge as we go along these slides. So 2-bedroom premium, you're looking at about $1.76, $2,600 per square foot on average starting. I have to be very careful when I say that actually, because sometimes a good starting price do help the the crowd roll up in preparation and in anticipation for the launch. And you're looking easily, the 3 bedrooms are well beyond 2.4. The 4 bedrooms are in the range of 3.1 to 3.3 area. So I'll say the starting prices, they do make a lot of sense. Let's go deeper into what are the price ranges you can expect. What might actually be the average prices on launch day, noting that these prices are actually starting prices. So again, I do want to take note of the CCR new launches that came out in 2025 because they are mostly post-area harmonized, and so they are apple-to-apple comparison in terms of per square footage as well as size and quantum perspective. So Robertson Opus that first launched on 19 July 2025 is actually along Unity Street. You can see that the average prices is actually 3,360 with a 41% reception on launch day. And UpperHouse, I'd say this is actually the crown jewel of the house trinity. In fact, it's one of the most prestigious launches that happened in 2025, especially also given the fact that it's also in CCR, because it's in a very, very unrivaled location of Orchard Boulevard. So again, it's launched on the same day as Robertson Opus, and it had a launch day of about $3,350 per square foot with the 54% reception. And what's the main difference between Robertson Opus as well as UpperHouse is what kind of party life that you want. You want the very quiet Orchard Boulevard, kind of near the city, in the city, yet also having that kind of privacy, or you want something along Unity Street, you're considered CCR, you're also by the nightlife of Singapore, which is Singapore River area. Or you also have this other CCR project that is along River Green. It's launched a month later on 2nd of August 2025 with a reception of 88% on launch day, on average $3,130 per square foot. So you can see across the board, all of them have achieved an average prices of $3,000 per square foot. So what different is Skye at Holland gonna be, especially since it's gonna be at CCR by Holland Village MRT station, by Holland Village commercial area. River Green itself, it was actually launched on the same day as Promenade Peak. You can see here. 2nd of August. But what's different for Promenade Peak? Of course, it's in RCR. It's just shy of CCR based on its area, but it does get to enjoy the spoils of how the Robertson Opus positions itself because it's just behind. It's in between Great World City MRT station as well as Havelock MRT station. In fact, it's Zyon Road, Paso B, and it's also overlooking Singapore River, so you get to enjoy the spoils of the whole Singapore nightlife area along Robertson area. But it does have an average per square footage of about $3,343 per square foot on launch day with the 54% reception. Of course, the other RCR projects that are notable in terms of its price, launch price, as well as launch day reception. Of course, you have Aurea that achieved $3,000 per square foot on average of its launch. During its launch at Arena East Residences, it is in District 15, East Coast area, over $3,000 per square foot. It's kind of similar and rivals with Maya Blue, not in terms of location, but in terms of pricing at this point. So it does beg the question, is $3,000 the new price norm, especially for well sought after locations as well as addresses? So that's for you to decide. So are the surrounding resales a positive price support or a warning sign? As you can see, the structure of this presentation is more about answering investors' questions. So the first part what I answered is regarding the price sensibility with respect to the rest of the other 2025 launches, whether it's in RCR, whether it's in OCR or CCR. Now we're going to talk about the resale comparison. And in fact, resale comparisons wise, nothing is of the same apple-to-apple comparison as compared to One Holland Village Residences, which is just next door to Skye at Holland. In fact, it's by the right of Skye at Holland, and it's also by Holland Village MRT station. So in fact, it TOP this year, and it's in District 10. It's still considered CCR, and it actually has different heights. So in terms of One Holland Village Residences, it has about 296 units, and it has different levels. You have a 53-story level, you have an 18-story level. So one of the closest comparisons would actually be Holland Village Residences, which is by the right of Skye at Holland, and it's also by the foot of Holland Village MRT station. In fact, it's also 99-year Liso project starts from 2018 and it just attained its TOP this year as well. It's 296 units and it's actually 3 blocks. You have a block of 53 stories, you also have a block of 18 stories, and you also have a block of 3 stories. You're looking at an average pricing. On average, you're looking at about $3,781 per square foot, whether it is the new sale and sub-sale combined as well as the latest resale. So if you look at the price distribution, in terms of per square footage wise, you get as low as $2,300 per square foot and as high as $3,700 per square foot. The quantum distribution, you're looking at about 1.17 as the cheapest, or you're looking at about $11 million for the most expensive 5-bedroom unit. And you can see over here, One Holland Village Residences is literally by the doorstep of One Holland Village. If we look at the different price ranges, you can see that One Holland Village Residences as compared to Skye Holland, the fundamental thing is that One Holland Village Residences is non-area harmonized versus Skye Holland, which is area harmonized. First, we look at the size ranges. So the One Holland Village Residences, right, the main difference in all of them is that One Holland Village OHV resident. In terms of the size wise, you're looking at very similar standard 1-bedroom sizes, 2-bedroom sizes, although it can go up to 1087 per square foot, which is actually the penthouse unit, the duplex penthouse unit. But you do get different size ranges between 689 square feet, 700 plus square feet, 800 plus square feet, and even 900 plus square feet. 3 bedrooms, you get a range between 1098 square feet as well as the 1615, which is a 3 plus study. For the 4-bedroom, you're getting a very big floor plate, very comfortable floor plate for own stay as well, 2088 square feet, with the 4 plus study actually being a duplex penthouse. You get 3358 square feet and a 5-bedroom purely 3455 square feet. So you can see that the price ranges 1.1 million to 1.5 million for the 1-bedrooms. The 2-bedrooms 1.6 to 3.2 million. That includes the 2 plus study. The 3-bedrooms they range between 2.5 million to about 5.1 million. I'd say it's still quite comfortable, a quantum in CCR. 4-bedroom 6.4 all the way to 11 million. And of course 5-bedroom got $11.4 million. I won't go too much into the rental yield because that's if, let's say, you want to hold it for a long time. The purpose of going through the investment analysis is actually to see whether the entry price is right. When you have nailed down a good entry price, profits will definitely come, and it's a byproduct of a good entry price. So today it's about the analysis of the entry price. That is a very big indicator of your future bigger profits. If you were to compare with Skye Holland's unit mix, you would see that actually Skye Holland's 2-bedder, don't have 1-bedder. 2-bedders wise, you're going for a very, I would say, cozy kind of floor area just on paper, but it's usable, right? 581 square feet, 2-bedroom premium 667, 678, 2 plus study, you got 732, 743. So they are somewhat smaller than the 2 bedrooms that you see over here on average. But of course, usable space wise, I would think they're both equally usable because we'll go through the different unit mix. 3-bedroom wise, 900 plus square feet, fully usable. I've mentioned all of this before. So this is just a recap of Skye Holland's unit mix, which I'll go into the deep details in terms of their floor plans. So 2-bed 1-bath comparison, you got One Holland Village OHR residences, 2-bed 1-bath, 689 square feet, the most basic one. They sold for between $1.6 to $2 million. So if we look at the post-area harmonization adjustment, on average it's about $2,700 per square foot. In terms of the usable space-wise, you can see that they actually almost look alike. They have a galley kitchen, dining area about the same, living area is about the same, balcony is somewhat bigger than that of Skye Holland Village. Bedroom-wise, you're looking at a dumbbell fashion. In terms of bathroom-wise, you have 1. In terms of usability as well as functionality of the space, it does fit the bill of a 2-bed 1-bath. A smaller balcony for Skye Holland's case, so it's different for different people, because if you don't want such a big balcony because you don't find a use for it, then this is something that's cozier in terms of size and does save you a bit of bucks. So if we look at the more, I would say, average kind of prices you can expect between $2,800 per square foot to about $3,100 per square foot, you're looking between the range of about $1.6 to $1.8 million. If you can tell, it's kind of like 4 years ago pricing when One Holland Village Residences actually did launch. It did launch for between $1.6 to $2 million and people were willing to pay for it. But the main difference is that the sizes have been adjusted, whereas, of course, the price per square foot wise, we do estimate the average to be slightly higher than the post-area harmonized adjusted price for that of One Holland Village Residences of 2007. So for the 2-bed 2-bath, 797 square feet, I'm taking the most basic. They sold for between $1.8 to $2.4 million. And if you look at the post area harmonized per square footage, you're looking at about, again, $2,700 per square foot. So you can see for Skye at Holland, if you do enter here, you have living and dining. That's in a single straight line, similar here. But what you're getting is that a dumbbell fashion. Again, similar to the 2-bed 1-bath, you're getting a dumbbell fashion for Skye at Holland, and that's different for OHR residences. So OHR residences, you do have a little walkway over here to go into the master, whereas Skye at Holland, you're having more of the walkway area becoming more of the living area actually, and the dining area. You do still retain the dumbbell fashion. But one of the bigger bonuses I would think is actually the kitchen. The kitchen over here is enclosable, whereas the kitchen here is still what we call a kitchenette, if not a galley kitchen still. So if you look at the average prices, they do range between 1.8 to 2.1 realistically on launch day. If you look at a 2-bed 2-bath comparison, there is a separate layout for Skye at Holland that's a little bit bigger. So this is a 2+ study layout. So we're looking at, again, OHV residences doesn't change, but it's more of Skye at Holland. The study has actually been fitted in the master bedroom. So that's one of the main things that is different as compared to the 2-bed 2-bath purely. The 2+ study, you can see that master itself has fitted the study. It's very similar to Sora. Sora is a new development that's coming up in the next couple of years in Jurong area. So it does give owners as well as buyers the flexibility to tear this down to actually create, let's say, a baby area, a baby room, or if not, a walk-in wardrobe area, or otherwise more of an enclosable study corner that's also accessible to the balcony. So that's one of the main differences over here. Whereas the other areas, they don't really change in terms of the sizes. Realistically, we're looking at the average prices ranging between $2 to $2.2 million for the 2+ study. So for the 3-bed 2-bath comparison, you can see OHV residences 1098 square feet. Average price per square foot post area harmonization is about $2,800 per square foot. Whereas Skye at Holland, on the other hand, slightly cozier in terms of size, 915 square feet. Layout is somewhat similar, except Skye at Holland, when you first enter, there is this little kink by the door area where you can probably line shoe cabinets, so on and so forth, and there you meet the kitchen. Then of course you have much of a similar layout, except that all the 3 bedrooms are not on one side as you can see in OHV residences, but you can see for Skye at Holland it's mainly like, 2 bedrooms on one side, 1 bedroom on one side. Realistically, the prices you're looking at is between $2.5 to $2.8 million. But I do believe, because in CCR area, you can see that the post-area harmonized prices between the 3 versus the 2 over here, it does increase. That means demand-wise, it will actually contribute to pushing up the prices average $2.6 to $2.7 million on average. That's what I would think, or even reaching beyond $3 million. And as you can see over here, the bigger the sizes, and in fact, the more bedrooms that are crossing 3 bedrooms, you would see that the average prices will actually increase because of demand. So post-area harmonized, if I'm looking at OHV residences, 208 square feet for its 4-bedder, I would say this is a very, very, very hard to find in Holland Village. A very, very big single floor plate 2,000 square feet unit. Price-wise, it's still extremely palatable of $6.4 to $7.1 million. Post-area harmonized per square footage works out to be about $3,354 per square foot. If we do contrast this to Skye at Holland, 2 different layouts, meaning the 4-bedder with the 3-bathroom and a 4-bedder with the 4-bathroom. The main difference is actually in terms of how much bang can you get for your buck. You're getting about $6.4, $7.1 million on launch day for OHV residences, whereas Skye at Holland, due to the area harmonization policy, as well as does fit the bill of having a 4-bedroom unit in Holland Village. You can see that the prices are somewhat slashed by half just by looking at the expected average price per square foot. But I do also, like I said, for the 3-bedder, think that it will not just be starting from 3.3 million as what the EDM had said. I mean, the bigger you are, of course, it's more towards family. Families would pay for space, right? They will also be willing to fork out a little bit more. So I would even think that the prices can go beyond 3.7, 3.8 easily, all the way to past 4. For the 4-bed, 4-bath, the difference you're getting is actually a junior master suite as well as an additional bathroom. So lift, lobbies, all of that, they do stay the same. Prices, they range between $4 to $4.5 million. that's just on projection, but I do believe that the bigger you go, the more expensive they can command just because of demand as well as quantum sensitivity that you can see over here. So if it's well beyond 4.5, I'm not surprised as well. So that's what I'm saying, because OHV residences have already crossed $3,354 per square foot. So I'm not surprised if for these two 4-bed 3-bath, 4-bed 4-bath layout, it does cross beyond $3,300 per square foot even on launch day. Okay, and lastly, the 5-bed 4-bath pricing, we don't see in OHV residences. We only see at Skye Holland. That might be one of the biggest selling points because it does the job of a 5-bedder as compared to OHV's biggest unit type, which is the 2088 square feet 4-bedder. You can see here 1-bed, 2-bed, 3-bed, 4-bed, and you have the 5th bedroom, the master, junior master over here. Again, the bigger the sizing, I do believe that it's no surprise if it crosses $6 million all the way through to $7 million. So if you look at the summary of the price guide, just based on the fact that we estimate the prices to be between $2,800 to $3,100 on average, since OHV residences have already crossed $3,000 per square foot 4 years ago, the sizes are kind of similar, whereas Skye Holland is a little bit smaller, so the quantum is actually managed. You're looking at a 2-bed over here for Skye Holland being very, very price sensitive as compared to a 4 years ago pricing that you see in OHV residences. The entirety of the 2-bedder over here, given its different sizes, the 667, 678, 732, 743, it does fit into the quantum range of what OHV residences did sell for, which was between 1.85 to about 2.52 million. In fact, what we're saying is that for the first time, you're seeing something that is livable in terms of own stay, in terms of area, and it's at a very, very central CCR location by the MRT, and it's under $2 million. Potentially, we won't know. 3-bedroom, it's no surprise if the price per square foot is on average higher than the price per square foot for 1 and 2 bedders because it's more family friendly and the quantum is more palatable as well. If we look at Skye Holland's 3-bedder, if you just take the 3-bedder premium, 1098 square feet, it's already between 2.56 to 3.43 million. Whereas the compact of the 3-bedder for Skye Holland, it's well within the $3 million range if it does launch for under 3,001. The 3-bedder premium for Skye Holland, if it does launch for under $3.1 million, is still within the range from 4 years ago that OHV residences have set. Even the 4-bedder, which is very, very close rival to the 3-bedder premium at One Holland Village residences, it's already been validated in terms of pricing. But what you're getting as compared to One Holland Village residences is actually an extra bedroom for almost the same size. So, but I do expect the prices to be well over 4 million on average, that's for sure. And then for the 4-bedroom and the 5-bedroom, 5 million, 6, 7 million, that's something that is going to be average. That's what I would think. Because of the quantum receptibility for the rest of the other D10 projects. And I'm also observing the transactions for, let's say, older developments with a lower per square footage because of One Holland Village residences being pre-area harmonized. You're getting very, very big floor plate units mainly for the bigger unit types as compared to, let's say, Skye Holland's unit types. They're still pretty standard as you can see in the mass market unit sizes. Having a more managed size actually brings down the quantum, even though, let's say, they were to be priced the same. Let's say 3,003 for the 4-bedroom and 3,003 for the 5-bedroom on average. It does still keep within the quantum that One Holland Village residences does have for its 3 and 4-bedder as well. You might be asking, what might the developer strategy be in terms of pricing? So we have to take note of the fact that it's actually 2 blocks of a 40-story building. So in terms of its facing, there are just 2 main facing because it's just 2 blocks, right? Otherwise the blocks would be staring at each other. So the outward facing would be the more premium facing, but there are different outward facings. Mainly the northwest facing, which is towards the Holland Rise, E66 Lane, GCBA, Wee Cheong Han Park, so on and so forth, Fort Avenue GCBA, which is an unblocked view, or you have the southeast facing, which is towards the Holland Village commercial area, and also for certain units, some parts of the HDB block, which is Holland Vista HDB. So this is just a representation of how it looks like transposed if we put Skye Holland as well as OHV residences together. You don't have any blocked view by OHV residences, it's just which view you prefer. Do you prefer the unblocked GCBA view, or you prefer a busier view that it's looking towards the south of Singapore. So this is a drone view. So essentially, this was northwest facing view. You get all the views into the distance because the GCBAs have the height restrictions. If you're looking at more of a busier, bustling kind of view, you're looking towards the southeast facing, more buildings in your sight. But you can see over here, this is the 22-story HDB, the Holland Vista. There's enough distance for you to not look directly at it. In fact, if you get higher floor units, you also look beyond it. So that's also a good thing. So this is just the perspective. If you're looking at the northwest facing, it's all the way into the distance towards Bukit Timah Nature Reserve. But the one thing I want you to take note of is that there might be some highway noise. There might be some noise coming from this road, which is a very, very busy road. I have to check whether it's a Cat 1 or Cat 2 road. I think like it's a Cat 2 road. It's a Holland Village road. So that might be some drawbacks regarding the facing. Whereas let's say south is facing, it's more towards, I'd say, a busier, bustling kind of view. If you do like the activities, you like to observe the activities from above. But you also do get to see Singapore Botanic Gardens into the distance as well as CBD. And this is if you're towering beyond 22 floors. The first part is actually different stacks, different views, they have different prices. For the second one, if you're having higher floors, if you buy into higher floors, likely there will be higher prices just because it's 2 blocks of 40-story development. So if you look at this Avenue South Residence example, Avenue South Residence is actually, I would say, Bukit Merah area. It's 99-year leasehold project from 2018 that TOP just 2 years ago in 2023, and is a very high density development with 1,074 units. In fact, you can see that it's like 5 pencil sticks sticking out from the ground, 5 towers, each standing at 56 stories, and you also have 5 blocks of conserved 4 stories with F&B shops, so on and so forth, and a childcare center. It's like one of its highest, one of its tallest in its area. So let me just show you the pricing matrix. So I dug out actually something between 600 and 700 square feet in terms of size. So you can see the increments in terms of the price per square foot just for apple to apple sake. It became from 1.8 to 1.9 to about 2000 to 2001, 2002, so on and so forth. So what it does show you is that the higher the floor, the higher the prices, and that's just a no-brainer way of also pricing from a developer perspective. But if you want to see what are the profits that these different levels of Avenue South residence sellers actually obtain, let me just look at, I've actually drawn out the same unit area, 1109 square feet, 1109 square feet, 1109 square feet. And they all bought in the same time frame, 2019, 2019, 2019, except this guy, 2021. Sold within a year from each other, May, November 2024, April, May 2025. But the one key thing I want to take note of is that it's not about, lower floor, it doesn't make the money, higher floor, it doesn't make the money. You can see here, 18th floor, out of 56th floor, it comes as one of the highest profit makers in its resale history. 15th floor, out of 56th floor, 360k in terms of profit. 12th floor, out of 56th floor, 404k. If you're looking at mid 25, level 25, that's like middle floor, you're looking at about 493k in terms of profit. It's not that, when you go higher, you make less profit. In fact, this guy is higher than these guys. So why did he make more profit? So the one thing you have to take note of is actually the pricing. In terms of resellability wise, you can see the higher the floor, yes, he actually sold for higher, 2004. Level 12, level 15, level 18, they're pretty, I would say, similar. They all sold for between $2,228 per square foot to $2,255 and $55 per square foot. They all entered at pretty similar pricing. So that's actually one of the biggest determinants in terms of the profits, entering at a good price. But you can see the exit, they weren't like the highest because people have topped there with about 2003, especially for the lower floor ones, but it's the biggest difference between the sale minus the purchase price per square foot with the same area that gives them the highest profit. So it's not really about higher floor don't make money or lower floor don't make money. So that's something I want to debunk for you. And in fact, if you look at a smaller type of the 947 square feet 3-bedroom, they were sold within a couple of months. In fact, I would say 6-7 months from each other. They entered at roughly they entered within a year apart. But I can see over here, profit-wise, they do make almost the same kind of profits being in totally different, I would say, leagues in terms of floor. You got the lower floor, which is 20, and you also have the higher floor, which is the 44. So this guy entered at 1009 and he exited at about 2002. When it was still a new sale, this guy entered at 2002, which is the price that the first guy actually exited at 5 years later, and he sold it at 2005. Yet their profits are still the same. So what I'm trying to draw over here is that it's not about higher or lower floor, it's about the pricing. If you can make the biggest gap, that's the best. That's for you to think about for Skye at Holland. So in terms of Skye at Holland, how does it compare to the other luxury projects that are launched this year? So let's just look at a very, very big overview, zoomed out overview of the performance in the market today. So the yellow line represents the OCR new sale transactions in terms of price per square foot. The orange line represents that of RCR and the blue line represents that of CCR. So Skye at Holland we're most interested in is the CCR because it belongs to its resident region. But of course you look at the adjacent regions so that you can also tell whether people with a similar budget can actually buy into something that's in an upgraded kind of, I would say, region. That's a simple way to look at it. In fact, if I'm looking at the past 15 years, the gap between RCR and CCR as well as OCR and RCR, they are closing from 53 and 37% respectively to 15% now and 28% now. The prices have all gone higher and higher, and in fact, CCR average new sale price per square foot has already reached $3,154 per square foot. Hence, the River Green, Promenade Peak, Robertson Opus, so on and so forth average pricing has been well accepted way past this average price per square foot. So you can see over here, these are the prices. CCR, you're looking at about $3,154 per square foot easily. RCR is about $2,734 per square foot easily, and about $2,121 easily for OCR new sale. But what I'm trying to drive at is the different curves for the different unit types. More specifically, if I'm looking at the 2 bedrooms, CCR itself is about $3,016, RCR is about $2,757, OCR is about $2,331. If you look at the quantum perspective, now there is a shift beyond just looking at per square footage. We're looking at the quantum perspective ever since the government enacted the new policy of the area harmonization. So that means if people were to get a 2-bedroom in CCR, easily they would have paid about 2.2 million, RCR is about 1.9 million, and OCR is about 1.6 million. I think they're extremely fair numbers and very, very representative of what's been happening in the past 1 year. If we look at the 3 bedrooms, you can see now the average price per square foot has actually climbed by a bit. Instead of $3,016, we're looking at about $3,142 per square foot. Then you're looking at RCR is about $2,691 per square foot, which is a bit lower. And OCR is also a bit lower at $2,204 per square foot. Quantum-wise, extremely palatable. You're looking at about a 3-bedroom in CCR for about $3.2 million, RCR is about $2.8 million, and OCR for $2.2 million. Still very, very palatable. 4-bedroom-wise, the per square footage has actually risen on average for the CCR from 3,003. You can see over here, 3,001. It has risen. So for the 4 beta, we're looking at a quantum, right? So 4 betas wise, you can see that the price per square foot on average is actually much higher than that of 3 bedrooms. So that does attest to the fact that people actually are willing to pay for much bigger floor areas and much more family-friendly unit types if you're closer and closer to the city. In fact, in the city. So CCR-wise, you're looking at about $3,553 per square foot on average. The 4-bedroom-wise, you're looking at about $8 million on average. RCR is about $2,757 per square foot, $3.7 million on average. And OCR is about $2.331 per square foot on average, $2.8 million for a 4-bedroom in OCR. These numbers are not new news to me. So, in fact, why I actually give you these numbers is so that they are a yardstick by which you can actually do a sensibility check to see whether you're below the per square footage and also below the quantum curve to see if you actually make a very good bargain on the prices you're getting on launch day. So, basically what this means is that you do want to stay below in terms of per square footage as well as in terms of quantum. It's a bonus if you can stay below in terms of per square footage because we know land cost only keeps getting higher and higher and higher over time on average, especially since you're in CCR. But if you can keep within the quantum that's average in the area, it's a safer bet. Best of all if you can do both, whereby you can manage in terms of the per square footage side, you keep within the per square footage based on the region's quantum curve. Let's take a look at the different pricing and reception of the different CCR projects as well as the notable RCR projects that have already crossed $3,000 per square foot on average on launch day. So if you look at Aria launched in March. So when Aria launched in March, on 8th of March essentially, you're looking at about the 2 bedrooms being extremely, I'd say, standard in terms of sizing, 635 square feet to 710 square feet. 3 bedroom is a little bit bigger, 1,000 square feet. 4 bedroom is very big, 1,400, and 4 bedroom is about $1,700 per square foot. The prices, they range between $1.9 million for the 2 bedrooms, 3 bedrooms about 2.86, 4 bedrooms about 4.27 to 5.24. So essentially what I'm trying to get at is also for you to help to extrapolate and see whether on the EDM, when they do launch indicative as well as price guides, it does keep in line with what they say they're going to launch at. So keep in mind 1.9, 2.8, 4.2 and 5.2. In terms of Aura pricing, of course, I won't go into the nitty-gritty of the unit types and the unit mixes, but you can see that the 3 bedrooms are actually on average 2.9, which works out to be about 2.9 million. You can see over here is actually beyond what they said their starting prices were from, because of course these are more palatable unit types. If we get into the bigger unit types, which is the 4 beta, you're looking at about $3,147 per square foot, which is about $5.205 million on average. So you can see here, it's well beyond the $4 million and $5.2 million range. The 2 beta, you would see average price is $2,817 per square foot. In fact, it's one of the most popular unit types. Average prices range at about 1.965, which is very, very in line with the EDM pricing. So just by looking at this first example of Aura's launch in March, so you can see that the 2 bedrooms, they do keep with its pricing on average. 3 bedrooms wise, it does exceed a little bit, 2.86 on EDM versus 2.9. 4 bedrooms wise, it does exceed in terms of the price expectations. You're looking at about 5.2 million on average with 7 sales. And you have a 5 bedroom that was actually released. One sold in June 2025. I won't consider it launch day reception, but it did sell for $12 million. So let's look at another example, One Marina Gardens. It was launched in April 13 and April 14. Again, the EDM state that they are priced at $1.16 million starting from 420 square feet. Very, very well. It's a very good, I would say, quantum perspective. 2 bedroom, 646 square feet, 1.8 million. 3 bedroom, 904 square feet, 2.45 million. 4 bedroom, 1647 square feet, 4.45 million. I think the 4 bedroom, they did it very well, especially since you know that these are the sizes, especially for 5 bedrooms, normal 5 bedroom unit type, as you could see from Skye Holland. So if you could see One Marina Gardens pricing and its reception, in terms of its 3 bedroom, 2,905 square feet, it was sold for $3 million. So how does it compare to the EDM? Average price is actually much higher than the EDM pricing. So for the 4 bedroom, it sold for $2,987 per square foot, which is slightly higher than the 3 bedroom price average. It sold for about $4.9 million. You can see here, it's way beyond what was written in the EDM. Their volume was actually pretty substantial. 49 units sold for 3 betas on launch day and 16 units sold for 4 betas on launch day. And then if we look at the 1 betas, on average, they sold for $2,918 per square foot because they are one of the first few launches that happened in 2025 with a very, very attractive quantum post-era harmonization. You're looking at about $1.2 million on average for the 1 beta. I would say it's pretty, especially in the city. And the 2 beta, $2,987 per square foot, which works out to be about $2 million. So you can see over here, the 1 bedroom prices, it does kind of keep in line with the EDM prices on average. 2 bedroom prices, the difference is about 200k, but it's very, very close. So you can see over here, I hope these examples are enough to also help to show you and illustrate to you that in CCR itself, the more people go towards the city, I mean, of course, the higher the prices are, but that's because they're able to afford it. Of course, the market favors those and the market demands more of those who can afford higher prices. And of course, with higher prices comes a bigger unit size. So they do charge the premium based on a bigger unit type and bigger unit size, as you can see evidently from 3, 4 and 5 bedrooms. So if we look at Robertson Opus, it was launched in the weekend of 19 July. And it's also launched on the same day that the UpperHouse was launched. So they're actually rivals, but yet Robertson Opus is snagged 41% of its launch day inventory and an average price of about $3,360 per square foot. So you can see over here, the 1 bedroom, 2 bedroom and 3 bedroom sizes, they're pretty standard. The 4 bedroom is especially big, 1,539 square feet. So considering the fact that these are post area harmonized as well. So you're looking at prices ranging between 3.1 all the way to 3.2 per square foot on average for launch. But let's see how it actually fares. So just remember, for the suites and the 1 bedroom, you're looking at about 1.3, 1.5 million, 2.2 for the 2-bedder, 2.5 million also for the 2+ study, $3.1 million for the 3-bedroom plus flexi. The average prices were between $3,100, $3,300 per square foot. If you look at the blue one, which is the 3-bedroom, it's actually sold for $3,412 per square foot on average, which is somewhat higher than the average price reported that was swept out on launch day, which is about $3,360 per square foot. It translated to be about $3.2 million, which is somewhat higher than what we did expect of the $3.1 million. Of course, you do have the influence from the 3-bedder premium that they did foretell that is going to be more than $3.7 million on launch. So of course, the 4-bedders wise, they launch, you see, higher in terms of the price per square foot as compared to the average inventory that was sold on launch day. $3,415 per square foot, which translates to be about 5.25. But what it shows you on the EDM is, of course, a range between $3,100 to $3,200 per square foot. So by what you can expect going through this whole exercise is that it's going to be much more expensive than you think, especially for the unit types that are bigger, as well as the floor areas that are going to be bigger. Whereas the 2-bedder, you're looking at about $3,423 per square foot, the 2-bedder. And then the 2-bedder, in terms of quantum, they said it's going to be about 2.2 million to 2.5 million. Yes, it does fall between that. It's about 2.4 million on average. UpperHouse, that rivals the Robertson Opus, it snagged 54% of its launch day inventory for an average of about $3,350 per square foot. Again, you see that it's actually cozier for the smaller bedroom unit types. The sizes are actually pretty managed. You're looking at about 474, 700, 764 for the 2-bedder. 3-bedder, you're looking at about 1,000 square feet. 4-bedder is extremely big because it's the 4-bedder suite. And it's geared towards, let's say, people who really want the lifestyle of Orchard Boulevard, having the serenity, yet also having the amenities by your doorstep. So 1.3 million for the 1-bedder plus study, 2-bedder premium and 2+ study, 2.1 to 2.3 range, 3.2 for the 3-bedder, and 6.9 for the 4-bedder. Let's see how it fares. For the 3-bedder, you're looking at about $3,513 per square foot, which works out to be about $3.5 million. Yes, it's higher than the EDM pricing. For the 4-bedder, you're looking at about $3,634 per square foot on average. You see, when you go higher and bigger in terms of the unit type, it does get more expensive because people are willing to pay. Since you're already paying for that location, they're willing to pay. It's well up to about $7.4 million. For the 1-bedder, it's $3,000 per square foot on average. So it's about $1.46 million, which is a very, very, very healthy quantum. And the 2-bedder, you're looking at about $3,273 per square foot on average, which is about $2.4 million average quantum. I would say these are very, very palatable quantum, especially for the 1, 2, and 3-bedder. For the 4-bedder, of course, the amplifier was actually the floor area that's over 2,000 square feet. So that's also contributing to why the prices are well beyond 7 million or even 6.9 million as they stated over here. Lastly, River Green pricing. So I'm showing you all the RCR as well, the notable RCR prices, launches that have achieved more than $3,000 per square foot, as well as the CCR launches, just so that you have an inkling on what Skye Holland kind of prices are going to be like. River Green was extremely well received on launch day. You're looking at about 88% sold for an average of about $3,130 per square foot on average. The 1-bedroom is extremely attractive based on the EDM. You're looking at about $1.2 million. 2-bedroom premium, 2-bedroom and 2-bedroom premium are looking at about $1.5 to $1.7 million. 3 bedrooms about 2.25, I would say very healthy quantum. 4 bedrooms about 2.8. Let's see whether it does stick to what it says on the EDM. So the 3-bedroom you can see over here, $3,135 per square foot on average, works out to be about 2.7. In fact, it's slightly that much higher than what it shows over here. I mean, of course, you do have a very healthy transaction volume of about 114 already sold on the launch day itself. 4-bedroom you can see over here, $3,271 per square foot, very similarly priced, but a little bit higher than a 3-bedroom pricing. On average, 3.2 million. It's still a bit 400k higher than the EDM pricing. Let's see about the 1 and 2-bedder. So it's about 3,051 per square foot on average for the 1-bedder, which works out to be 1.3 million. Yes, it's very, very in the range of the $1.2 million that they stated on the EDM. And for the 2-bedder, you're looking at about $3,121 per square foot, which works out to be about $1.8 million. it's still very similar, especially since they have the 2-bedroom premium that is well within the $1.72 million range. So as you can tell, the summary, I've gone through all the different examples for, Aria, One Marina Gardens, you have the Robertson Opus, you have River Green, you have Promenade Peak, which is coming up next, the last one. 54% snag on launch day with $3,343 on average pricing. The main difference between River Green as well as Promenade Peak is that the floor plate, especially for Promenade Peak, is a bit bigger. Naturally, the prices in terms of quantum will also be a little bit higher, especially for the bigger unit types. Why I say so is because you can see for River Green itself, the 3-bedroom is about 700 over square feet, 4-bedroom is about 980 square feet, whereas for the 3-bedroom, 4-bedroom, you can see over here, it's already crossing 1,000 square feet. The 4-bedroom is about 1,004, and you have a 5-bedroom, which River Green doesn't have. The 5-bedroom is about 1,884 square feet. If you look at the prices wise, $2,009 for the 3-bedroom, which is $3.2 million. 4-bedroom is about $3,391 per square foot, which is about $5.153 million. So how does it compare? If you look at the 1-bedroom, 2008 versus the Quantum, 1.49 million, it's extremely palatable. It does keep within its range. For the 2-bedroom, $2,900 per square foot with a $2 million Quantum, again, it does keep within its range, especially since we see a lot of volume within the 1 as well as the 2 beta unit types. 32 units sold for the 1 beta on launch day and 186 units sold for the 2 betas on launch weekend. Of course, the 5-bedroom, I have to dig it out separately. So on average, you can see that the prices are well beyond that of 3.3 that you see for the 4-bedroom. 5-bedroom, you're seeing about $3,496 per square foot on average, which works out to be about $6.5 million. And I would say, for this kind of quantum perspective in CCR itself, I would say it's still pretty decent given its newness premium. The fact that it does do the job of a 5-bedroom, because some developments, they have a very big floor plate, but they have only 4 bedrooms. They are also sold for between $5 and $6 million. So I'd say the 5-bedroom wise, it does do the job of a 5-bedroom, and it will be extremely popular for, let's say, the PRs or even foreigners who can afford it but are not able to buy landed. This is just a summary that I've compiled for the CCR as well as the notable RCR projects in terms of the price per square foot as well as the prices across the different unit types from 1 beta, 2 beta, 3 beta, 4 beta all the way through to 5 beta. As you can see, just looking at a one view glance at this chart, for 5 betas wise, you're only looking at Promenade Peak being able to deliver in terms of that kind of unit type. In terms of average prices for all of them, they have well hit $3,000 per square foot and even over. I mean, one Marina Gardens right now, you're looking at average prices across a $3,000 per square foot as well. So 1 beta wise, you will not go wrong if you're staying within the whole range of between $1.2 to about $1.5 million. So as somewhere in D5, that's by the doorstep of Holland Village MRT station, if you can keep between $1.2 to about $1.5 million, it'll be extremely palatable and healthy for you regardless of how big or small it's going to be. So the 2 beta wise, you can see that the spread is actually a little bit wider. The spread is between $1.8 million in River Green, which is a very healthy location by the doorstep of Great World City MRT station, all the way through to about $2.4 million as you can see in UpperHouse as well as the Robertson Opus. So why they command these prices? Because UpperHouse, it's by Orchard Boulevard, which is literally at Orchard Road area. And the Robertson Opus is literally at the nightlife of Singapore, which is the Robertson Quay area. So you're getting two very big hot spots, hence their prices. 3-bedroom wise, you're looking between $2.7 million all the way through to about $3.5 million. If you're able to snag a 3 beta that's within this price range, I'd say it's extremely healthy because these are the people who will be coming up against you when you TOP in 2029. Skye Holland is going to TOP in 2029. 4-bedroom wise, if you're able to snag between $3.2 million all the way through to $5.1 million, I would say it gives you a very healthy runway before you reach the kind of landed pricing that you would see in CCR for 4-bedroom and 5-bedroom onwards. For 5-bedroom, there isn't too much to say because it is, I would say, 6 of the launches that you see in CCR as well as the notable RCR projects. So it's a category of its own, but what it will be comparing against is actually regarding whether there is demand for a 5-bedroom that is in the Great Wall City, that's in the Havelock area, that it's able to go for, let's say, $7 million onwards next time, so that the buyer currently still makes a profit. So that's for you to decide. So how will Skye's projected pricing compare with future 2025 and 2026 launches and its surrounding? So what I've showed you in the previous table, as you can see over here, they are launches that have already launched. There are going to be launches that's going to be in CCR area, as well as notable RCR area, or even OCR area that is having the same kind of land price as that of Skye at Holland. So how are they going to affect Skye at Holland's pricing, and whether Skye at Holland will look cheaper than what you'd see beyond the $3,000 per square foot? So the first is actually Zyon Grand. Zyon Grand is going to launch in 4th quarter of 2025. In fact, it's going to be the next couple of weeks before we get the price updates and the price guides. But you can see over here, it's actually in District 3. It is in RCR, it's not in CCR, but it's very, very close to Promenade Peak. Zyon Grand is actually 2 blocks of 62-story residential tower and 1 tower of a 36-story service apartment with a childcare development center. It's 99-year leasehold again. It's a very big land size of about 164,000 square feet, 706 residential units and 373 service apartments. So what I want to do is actually just to take the residential component, because the service apartment component is actually going to be leased out. So if you look at Promenade Peak, which was the most recent CCR launch, so Promenade Peak itself, the average prices actually already hit at 3,343 per square foot with a 54% launch day reception. And in fact, the 1, 2, 3, 4, 5 bedrooms, the prices on average are actually in this range: 1.49, 2 million, 3.2 million, 4-bedroom is 5.1 million, and 5 bedrooms about 6.5 million. This is the only, Promenade Peak is one of the only CCR launches that notably has the 5-bedroom, especially for this year. Promenade Peak, because it's purely, I would say, residential, in terms of the land bid wise, it's about $1,304 per square foot per plot ratio. The developers bid about $730 million for the land. The break-even price worked out to be about $2,229 per square foot per plot ratio. But that's actually occupying Parcel B, which is somewhat further away from Havelock MRT station. This MRT station you're seeing over here is actually Great Wall City MRT station. This is Singapore River. Above over here, you actually get Robertson Opus, which cuts into Unity Street, and it's considered CCR. But over here, you're looking at about Havelock MRT station. You're getting Zyon Grand, which is closer in terms of a 7-minute walk towards Havelock MRT station. What you're getting is actually a mix between residential as well as the commercial component. The land bid wise, you're looking at about $1.1 billion bidded for this land. In terms of the highest bid, is about $1,201 per square foot per plot ratio. It does seem to be a bit lower than Promenade Peak, correct? Comparing the different use, Promenade Peak is purely residential, whereas Zyon Grand is residential with a first-story commercial, as well as the long-term service apartment. The break-even price you see over here, it also looks a bit lower than that of Promenade Peak at $2,091 per square foot. However, that's for everything, including the service apartment. But what we want to do is actually to factor in the sellable strata break-even price of about $2,728 per square foot that's resultant if we just look at the residential component. Because mind you, the service apartment status is going to be leased out, it's not going to be sold. So we only have to take note of the area, the gross floor area for that of the residential component. So the sellable strata break-even price works out to be about $2,728 per square foot. That's the 2025 upcoming CCR, I would say the RCR launch that is going to rival that of CCR launches that we saw just now. But if we look at the future, 2026 as well as beyond, in fact, the lands that would be ready for launch in terms of project launches that are going to release next year, the lands have already been bidded this year as well as last year. Let's look at the CCR launches. River Valley Green, Parcel B. It's a mixed development with about 1,420 per square foot per plot ratio in terms of its land price. Expensive. Break-even works out to be about $2,386 per square foot, which I doubt it's the actual break-even price. This would be the break-even price for the total of the residential as well as the commercial component. The real break-even price is of course going to be much higher for the residential sellable component. Dunnan Road itself, CCR, purely residential, $1,410 per square foot. Break-even is about $2,003. Holland Link, that is the other Holland GLS. That will be very, very heavily compared to Skye Holland's pricing. So CCR again, the land price is actually beyond that of River Valley as well as Dunnan Road. We're looking at about $1,432 per square foot per plot ratio. Break-even price is $2,402 per square foot, and it was just recently bidded last month on 7th of August. These are examples of how you would also see what are the other CCR prices that will launch in the next coming years. In fact, you're seeing land prices that are well beyond that of Skye at Holland, and it's about $200 over more than that of Skye at Holland. Break-even prices well beyond that of Skye at Holland's. If we look at the other adjacent regions like RCR and even OCR, I show you this other competitively priced land bids in the other regions. Bayshore, $1,388 per square foot per plot ratio is in OCR. It's not in East Coast as we think in like Mayor Road, but it's in Bayshore, which is somewhere towards the right of East Coast. Dunnan Road, I've mentioned this. Chuan Grove, this is the other OCR project that will be drawing a lot of attention because of its very high land price. 1,376 per square foot per plot ratio, and it's in District 19 in OCR. So nobody knows how this would turn out except that it's going to be more expensive than what Chuan Park has actually delivered, just purely based off of land price. Of course, that's something that we have to observe in the longer run. And then the Holland Link itself, I've mentioned this, about $1,432 per square foot per plot ratio. So just by looking at all of this, you have the CCR in its mix, you have the OCR in the mix. And the OCR land prices have already climbed to beyond $1,300 per square foot per plot ratio. So that begs the question of whether Skye at Holland, today it might look like it's crossing $3,000 per square foot on average for the bigger unit types. And is it very expensive? By all means, the future land bids are also going to be even more expensive. In fact, $200 on average, $150 on average, more expensive than that of Skye at Holland's. Does that mean it's also going to cross $3,000 per square foot? So that's for you to also unpack and decide looking at the data. So I have a couple of final verdicts that I want to discuss regarding my thoughts surrounding Skye at Holland. What I actually think is that number one, first of all, is actually quantum sensitivity. Ever since the URA's policy of post-area harmonization, whereby they're just only gonna look at area that is fully usable and fully livable, we're not calculating the RC ledges, we're not calculating the AC ledges, we're also not counting the void areas. That's usually evident in more of loft units, if not penthouse units or duplex penthouse units. So you're seeing a more managed area. That means what could have been 900 square feet for a 3-bedroom. Now it's been reduced to be about 700 plus square feet, as you can see in River Green's example. And that's how the quantum is more managed. Now the perspective has shifted, not just looking purely at per square footage, we're also looking whether, let's say, a $2 million quantum, it can buy you a 3-bedder. Because last time, in terms of new launch perspective, the $2 million very rarely could only buy you a 3-bedder. At most, it can buy you a 2+ study 2-bedder, and it's usually in the OCR region, and if you're lucky in the RCR region, especially over the past 2 to 3 years. But now we're seeing a changing tide in the market whereby some of these policy changes have made the new launch pricing in very prime areas like, let's say, River Green, let's say in UpperHouse example, to be kind of similar to the OCR pricing launched in the past 2 years before the area harmonization policy was enacted for that land. So that's why it does beg the question that, the shift before has just only been purely in the per square footage. You can only manage the pricing just based on per square footage. But now we do see that quantum sensitivity is increasingly arising because there is a very different paradigm that we're living in whereby the resales, sometimes because of its unusable area and bigger area, sometimes, of course, it has a lower per square footage because of the non-newness premium. But because the new projects, they have a more usable area and hence on paper, it looks that it's going to be smaller. But of course, the price per square foot is going to be a bit higher just because of the newness premium. They are kind of like the same price. If not, there are certain instances whereby the new projects, they're actually less expensive than the old projects. And more evidently, you can see that happening in the CCR area, especially for the bigger unit types. Because what we're getting is like 3,000 square feet 4-bedder, that kind of thing, 2,800 square feet 4-bedder. Wing on Life Gardens, it's a 1984 TOP project. They're selling on average for between $6.7 to $7.2 million or even $7.5 million the last I checked. You're getting about $2,500, $2,600 per square foot on average for that. If you were to buy 4-bedder, let's say within River Green, you could have gotten it for about $3.2 million. So then will the resale the resales that are way in the past gonna be the benchmark quantum mover for the new launch in coming days. So that's something for us to think about. Okay, so that's the first perspective. So the number two consideration that I might have when I do enter into Skye Holland would be, let's say, whether its pricing will actually rival with the balanced non-area harmonized projects that have balanced inventory. I give an example of what I mean. The time 3 years ago, 2 years ago versus the time now is extremely different because of this one policy called area harmonization enacted by the URA to recognize area more efficiently in terms of usable area instead. How this actually plays into what I'm trying to tell you is that, let's say for example, if the 2 bedrooms sizes wise 581 all the way to 668 square feet is post area harmonized, and they were to launch between 1.51 to 1.76, or even let's just say up to $2 million, because we are looking at average pricing. These are starting pricing. If we were to look at different examples, we are going to look at the examples of when you were TOP in 2029. Let's look at Linden Woods, just for simplicity's sake. Linden Woods is along Science Park Drive. It is non-area harmonized, and it's going to TOP in the same year as that of Skye Holland. It's not in a very favorable location, but you do see that prices have already averaged to be about $1.7 million for inventory that have sold thus far. If you are able to get under 1.7, is it a good buy? So that's a question I'll plan you with. Let's say for Bloomsbury Residences, it's post-area harmonized, correct? It's not freehold. Average prices are selling between $1.6 to $1.8 million. The post-launch inventory. So does this mean it will put the 2 betas at a very, very palatable price quantum? Given that, we're looking at under $2 million just to be safe? Or even let's say something that started selling 3 years ago, Terra Hill. The average 2-bedroom prices have already hit $1.928 million. And it's freehold, TOP in 2028 in District 5. And it's RCR. Does it mean that Skye Holland's 2 beta would actually be a very, very good buy? So that's something for you to think about, right? So why I draw all these examples is because if I'm just looking at the one glance perspective of the 2 betas, the direct rivals that would actually TOP in the same kind of time region as that of Skye Holland, which is 2029, 2028 era, on average, people have already entered between $1.6 to about $1.9 million. And they're in RCR. I'm not even quoting OCI projects. I'm quoting about RCI projects. Does this mean that the 2 betas in Skye Holland is going to be a very good buy? Because the RCR adjacent region has already achieved those pricing on launch day and it's much earlier. So that's something for you to think about. So the third thing I want to highlight is actually the current inventory that are stuck in the market amidst this whole post-area harmonization attractive quantum play slew. I just give you an example. It's something for you to think about as well. So if there's balanced inventory in OCR, I won't name this project, but this 2 beta is 700 square feet. It's not too far off in terms of size-wise as compared to that of, I'd say, Skye Holland. But its price per square foot wise is already 2007. You're looking at about 945 million, 1.949 million. So are these going to be stuck, and is it going to give rise to a new wave of discounts, especially for non-area harmonized projects that have prices that exceed the area harmonized projects but in a more, I'd say, inferior district and inferior location as compared to, let's say, Skye Holland. So we don't know whether this might set a new wave of dynamics. But there is something for you to think about. This is something that happens usually in the 3 to 4 million quantum range in OCR. But since we're talking about CCR, we're looking at about the $6 to $7 million quantum range in CCR specifically. Why I say this is because today when you enter into a project that's 6 million or 5 million, likely you're going to sell it for $6 to $7 million to make a profit if you do intend to sell it in the short to medium term as an investor. But once you cross over this $6 to $7 million or even $6 to $8 million kind of price range, the alternative asset class will start to arise as bits and pieces in your conversation, like whether landed might be a more superior pick in terms of a better asset class for those kind of quantum ranges. I give an example why I say that is because currently I'm marketing a penthouse unit. It's a very big floor plate, but with a very manageable average price per square foot. But because of its very big floor plate, the quantum itself is between 6 and 7 million. The owners were extremely lucky. They bought it 10-15 years ago for between $3 and $4 million, including BSD. So what I'm trying to say here is that you will make the money, but whether the ease of exit is going to be like a walk in the park because you're going to cross that crossover point of $6 to $7 million where people can buy a landed in, let's say, RCR in Serangoon, they can buy a $5 million inter-terrace, they can buy a $7 million semi-D, or they can go and buy a $7 million inter-terrace within the Bukit Timah area, or an $8 million semi-D, a very small semi-D in the Bukit Timah area. It's something for you to think about. Once you hit the crossover point, the ease of offloading might not be the easiest. Whereas, let's say, the concentration would then be towards PR buyers who are not able to buy landed, and hence they'll look at condo as their choice asset class. But this only applies usually for the bigger floor plates. I'm thinking about the 4 to 5 bedrooms, the 4 bedrooms onwards, especially for Skye Holland. So I think that would be a big consideration, especially for the crossover point for Skye Holland. You know, the 4 bedroom prices wise, it's not going to be as it is as you see in the EDM, at least not for its average prices. So that's something for us to think about very, very deeply. But having said all of these, if we look at the central region, under $7 million, what kind of freehold landed can you get in terms of land? You're looking at about a range of between 3 million, you're having 4 million, 5 million, 6, 7 million dollars. And this is just a snapshot of the first 20 to 30 transactions. Of course, you have much more. And of course, this is very dependent on the land area. Because land is also something that's more malleable, whereby you have a certain land area and you can multiply your build area based on the land area and your zoning. So this is what I mean by crossover point. Once you hit the crossover point of $6 to $7 million, usually, including build costs, then people might be considering other asset classes. So that's something that I have to think about extremely deeply, given the fact that I'm also actively marketing a $6 to $7 million penthouse unit. There's also a very big floor area. It's a condo, yet it's also priced extremely reasonably as well. So that's just empirical experience. But without further ado, I hope today's discussion actually gives you a lot of perspective regarding whether Skye Holland is actually a very good buy, and that different unit types, they do have different price indications that you can foretell based on the EDM itself. And of course, I've mentioned different considerations that I would think about when I'm purchasing into Skye Holland, just based off of the fact that whether it's easier to sell next time and whether it's able to give me the kind of profits that I'm looking at next time, and the ease of selling as well, given the demographics as well as the psychographics of the buyers of CCR, as well as its location at hand. But without further ado, thank you so much for watching today's video. I hope it gives you a bit of perspective and gives you a bit more questions and nuggets to plant in your mind before you make a decision with regards to Skye Holland or other inventory that's happening in the market right now. My team and I have spent over 100 hours to analyze thousands of inventory in the market today to find out what's the best pick as well as the most investable option in today's market. So if you want to know, do drop me a note in the link in the bio below, and a member of the team will reach out to you to connect. As always, thanks for watching today's video, and I'll see you on the next one.